What is the best candlestick chart pattern to use for your trading and investing? Well, that is a very good question and a difficult one to answer. In this video, I'm going to give you my viewpoint on what I think is the best and the one that I use the most when I'm doing my trading. But first of all, let's start with the basics. Now, when you first look at a chart, it is all about the price data, just the price data. You haven't added anything on to it yet, no indicators and moving averages, whatever. We've got the raw price, and we can use bar charts, we can use point and figure charts, we can use Renko charts. There's so many different types, but more and more popular these days is the candlestick chart. And what are those candlesticks telling us? Well, they're telling us stories in miniature, in different time frames, and say, like I said, in different combinations to produce a story of where that price may be heading next. Now, there are countless amounts of patterns, and they normally range between 1 and 7 candles, but to learn them all is a very difficult job. And when you're trading, it's also, especially in the lower time frames, very hard to recognize these patterns of candlesticks when they arise. So what I've done is, after a lot of experience and practice in this field, narrowed it down to just one. And I've also done a few tweaks on the candlestick chart, and this pattern just makes it so much easier to use. It's easy to spot, and it takes no thinking about when you see it. You know what to do, and it works brilliantly across all time frames and with the addition of further indicators. So with that, let's take a look. So what is my favorite candlestick pattern? Well, it's not a combination of 7, 5, 3. It is just one, and that is the doji / spinning top. Now, what is that pattern all about? Well, that one candlestick is telling us that there's indecision in the marketplace, or whatever asset you're trading, whatever time frame you are trading. It's saying that the market doesn't know what to do next. But normally this pattern candlestick is an excellent indicator for suggesting that the price is going to reverse against the previous trend that it had been in. So it is a powerful, simple, easy indicator to spot on a candlestick chart. Now, if we dig in a bit deeper to the candlestick, why is it saying, well, the market is indecisive? Well, just remember that the candlestick is a storytelling tool. So let's have a look at, say, a spinning top. Let's translate what the spinning top is telling us. Well, we can see the high and lows. So we've had a day of, a reasonable range in terms of price, but have a look at the body. It's in the middle. The open and the close have ended up virtually, on top of each other, meaning actually it started the day at X and it's finished at virtually X, meaning that really it had no direction in its capabilities of whatever time period you're looking at. It moved down, it moved up, and it ended back in the middle, i.e. indecision. And that's what makes this an easy candlestick to use and spot. And the doji is the same, it's just a smaller, tighter spinning top. Like I say, it makes them easy to use and spot. But in the candlestick chart on their own, it can be less predictable. So what if I told you that you can make this even better by upgrading the candlestick chart to a Heikin-Ashi chart? And then when you've done that, really it's the only chart pattern you need to know. You can get rid of all those others and just focus on the doji spinning top patterns playing out on the Heikin-Ashi chart. So we've narrowed it down even further by adding on the Heikin-Ashi chart. Again, it works in all time frames, all markets, and like I say, it's even easier to spot. So let's take a look. Why use Heikin Ashi? Well, it smooths the candlesticks out. It's basically a combination of two candlesticks, and because of that we can see the trends a lot more clearly. Now remember what I said earlier, the doji, the spinning top, is ideal for spotting reversals in the price action. So if we've smoothed out the trends and made them even more obvious, if we came across one of these dojis or spinning tops, then it's more likely that, like I say, it's going to signify a possible change in the price direction. So let's take a look at a few examples. I've got a couple of examples here to show you different time frames and markets. First one up is Apple, the stock weekly Heikin Ashi chart, and you can see the dojis, spinning tops, and like I said, it doesn't matter what market time frame it's in, these become a lot more visible when you switch to Heikin Ashi mode. And then we've got the FTSE 100 3-hour Heikin Ashi chart, the UK's leading stock market index, and again different time frame, but they're still very visible, these turning points, these doji spinning tops. But as you can see, sometimes you get a whole collection of them together, and sometimes you get a green one, bullish one, and you think, well, which way is it going to go next? And it's the same, you might get a red one and it you'd think it's bullish and it goes bearish. This is part of the problem of just using the pure price data. Now I can't just use candlesticks on their own. I try and, like we've done here, filter the process to make it a lot easier to use. I still think even by moving it to Heikin Ashi and the doji spinning top setup, the odds aren't as stacked in your favor as they should be, and I think this is a rule for all candlestick price trading. I have to, and you will find that you will improve the odds of success if you add in other confirmatory indicators, whether that's sentiment, volume, volatility, or your standard indicator tools, maybe like stochastics for spotting the reversal, RSI, MACD, those type of indicators to confirm the indecision and the actual turn of the market. So let's again take a look at a couple of examples with the indicators, the extra information built in. So you've got to remember, these are just ideas for you to go away and play with. The first one made up of RSI, pivots and trend lines. They're the component parts to add on top of our Heikin Ashi and doji spinning top type approach. And this one I'm going to say is maybe a faster paced intraday, almost a scalping-y type of approach strategy. And we're going to do it on the UK FTSE 100 again, 5-minute Heikin Ashi chart. And here you go, here's a chart example, and it's really simple. You're looking for the spinning tops, dojis, around key pivot points. Often the psychological players like the magnet pulls them to these pivot points, and we're looking for the reversal in the price. But down the bottom you see an RSI, quite a fast one, 7 period, with a moving average cross on top of it, and we're going to tie what we see on the pivots and the doji or spinning top along with the buy sell RSI indicator at the bottom, and we're looking for a cross of the moving average there. And you could also add trend lines on top of that for breakout type setups, looking for doji spinning tops around key areas and going through exactly the same process, again marrying it into the RSI, maybe using the pivot lines as a price target reversal point. As you can see in this example, we had a loose, I would call it, spinning top, but married into the RSI, it gave us the confirmation to get into the trade. So, another way of enhancing the strategy further from just using it around the pivot point lines, you can use it intra pivot points, and it makes for another highly effective short-term intraday sort of scalping strategy. So some ideas for you there in the much shorter term. So now let's turn to a slightly different style of trading, maybe a more swing approach using different indicators and tools, a different market, different time frame, to try and come up with some variants on our idea around using dojis and spinning tops, just to, like I say, get you thinking about how you can create your own strategies and ideas around, from taking a simple candlestick pattern all the way through to full strategy and implementation. So here we're adding our moving averages, the awesome oscillator, DMI, directional movement index, and trend lines. Here we've got the US dollar, Norwegian krona in a longer term 2-hour chart here, and I'm hoping by now you're starting to think of the process of what we're looking for and how we can use it. We're going to start with those doji spinning top patterns and then build it out from there. So here I'm looking for those dojis to be bouncing off those moving averages. The price has pulled back a bit like it did with the pivots, and then I want to see that bounce on away. But I'm also tying it in with the DMI at the bottom. That's my trend filter. Green above the red is bullish, and vice versa. Then I've got two awesome oscillators, and as they cross and go above and below, that's a buy above, and crosses below, it's a sell. So you're putting that combination together along with where the price is playing against those moving averages, and it's a case of adding up all the variables, all the different points, to get you in on this trade. Again, we can enhance it further by adding on trend lines and using them as the breakouts from that bounce on the moving average, and looking for dojis spinning tops around those key points as our confirmation in on to the trade. So there you go, a few examples, strategy ideas on different markets and time frames that you could, like I say, go away, build a plan around and use them in your trading. Highly effective, can be automated as well. They've worked well for me over the years, and it's a nice one. If you haven't got too sophisticated setup, to get on your charts and do a bit of day trading around as well. So it offers many options, and like we said, we've taken it right the way from the basic candlestick pattern and tried to put the odds of success, giving us the edge by adding in these extra analytical tools, these extra technical analysis tools, to strengthen our ideas around the turning point, reversal theory of the candlestick pattern. Now remember what I said, this the doji spinning top candlestick pattern is something that worked and does work for me across all sorts of markets and time frames and strategies I run. Now it might not be the same for someone else. You might have your own favorite pattern and think I'm talking a whole load of rubbish, but like I said, it's what works for me, and I think you could do far worse than maybe building up an approach like you've seen in this video here. And if you are keen on developing strategies around reversals and turning points in, like I said, different time frames and markets, then this way of using the doji spinning top in combination with other tools is a great way of building and starting your own winning strategies. Now if you want to learn more about Heikin-Ashi and how you could build that into your trading, I've got a great free course on my YouTube channel, and you can watch that here now.